Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 24th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll see here that the daily time frame had compressed significantly prior to yesterday's sell-off. We quantified that and noted that we could see a pretty significant breakout move. This move occurred to the downside, a huge stop run day in the previous session. It also occurred below that 2900 key level, so a pullback and drop. And now what we're seeing is after a high range day, you tend to see a low range sideways type of day. So we could be looking at a day where we mostly trade in a lower range. Right now we're 44% of normal. But for the most part, after a sell-off like this, you usually see any pullback is an opportunity for bears to defend for another continuation lower. So these pullbacks, you can see right now the 2840, for example, is being defended. Any prices above 2840 and into maybe 2845 could also be defended if tested later on in RTH. But again, if a price were to rally into this zone and by the end of the day closes below, say, 2830s, that could be quite bearish moving forward and heading into next week. All right, let's take a look here at the NQ. Again, another high range day in the previous session, another breakdown, and this high range day will tend to lead to a low range trading day the next session, and that's kind of what we're getting right now. Low range trading range action. We're trading just 33% of normal at 54 points of range. We've been averaging 163 on a 10-day basis. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So those 10 days right now, pretty high range, high volatility days, 163 point normal. On a 5-day range basis, we had traded just 129 on average. So again, this has really increased in volatility on a recent basis here. Yesterday helped. Now, do we get mostly trading range action? Is the return retest after stop run in play? If so, this suggests we could be looking at quite a bit more weakness again to the downside, especially if price cannot reclaim the 7400 level. All right, let's take a look now at crude oil. You'll see here crude oil had the biggest day of the entire year yesterday. A major breakdown out of the range there. We had just been quantifying the 3-day range and how compressed it was. If you look at this bar right here, that was yesterday's range, 408 cents of range. That was massive, and that was about 176% of normal. And if you look back, you can see the last time we hit $4 of range was during the major reversal the day after Christmas, December 26th. That was the bottom in the market there, and that was the hugest day at that point. So right now you have 4 handles of range yesterday. Usually what happens after that is you see some sort of pullback or low range day. And so again, just like the ES and the NQ, today could be mostly range bound, and we're already seeing that in after hours and pre-market trading as prices tightly traded within a 41% of ADR range. Only 73 cents right now of range for the day so far. That's 41% of normal. It's been averaging $1.76 on a 10-day basis. So when you get a 4-day range, you tend to go lower range day. Again, fade the edges, look to buy new lows, sell new highs, back and forth if you want to play along in that type of day. Again, given the major breakdown that we've had, this especially breaking down through the $60 level. I mentioned watch 60. If we reject it, it could be another bounce up. If we fail there, 58's the next target. We hit 58, actually 57.33 yesterday. The next LVN down would be 55s. So even if we were to bounce here, any return of 60 from below could still be a selling opportunity for 55s right now. So we got to see where the bottom is right here. This is obviously a major sell-off in the previous day that we predicted or forecasted with our ADR indicator down here. So basically, if I double click it and make it 3 days, bring it up over here. That was what the range was showing here, was this 3-day range and how narrow it was. I mentioned if we get a breakout, it'll be somewhere about 4 handles of range that we could see. We got that in 1 day, but the breakdown also occurred at 63. It's gone 63 to 57. It's been $5.67 of range so far over the last 3 days. Just actually more than that over this 3-day basis. So just a major move, and overall we could see more weakness out of it if price continues to hold below 60. So any retest of 60 could still be a selling opportunity. All right, let's take a look now at gold futures. We talked about gold and the 1270 level. This one, we also mentioned that we have a narrow 3-day range like crude oil, and that we could see a breakout. Yesterday at the pre-market report, we were sitting basically right at the zone. We were above these 2-day highs but below the 3-day highs, and right after the pre-market report we saw the explosive move higher. It hit previous month's close in the pivot range and then backed off to end the day, but a big time move yesterday, and then now another range bound day. So all of the fireworks appear to have been Thursday, and now on Friday we may see digestive trading range type of days heading into the weekend. Keep in mind, this market has been torpedoed 3 Sundays in a row on China trade wars, which has started the week rather bearish. 3 Sundays in a row. So again, heading into next week, what will happen with regards to headline risk this weekend, keep that in mind. Overall for gold, if it can continue to hold above these recent breakout point of 1278, more upside could be seen toward about 1300. But remember, we have lower highs in play, and it wouldn't surprise me if any bounce here gets dealt another blow down. Below 1270 opens up much more downside. That's the key pivot to watch right now. All right, that is it for now. We will see how this plays out heading into the last trading day of the week. Be sure to like, share, and subscribe, and I will see you in the trading room. Have a fantastic weekend. Take care.